I think from a Bitcoin specific or a crypto specific market, looking specifically at Bitcoin, right? I think the biggest pressure to the downside and the risk that decoupled back in June was with all the leverage in the markets. I think that selling pressure has subsided. And there's a ton of on-chain indicators that are showing that selling pressure is getting exhausted, which is why you're seeing equity markets make new lows just recently and Bitcoin and crypto hanging on as a whole. I think from Bitcoin's perspective, though, you have to really look at the miners, right? Cost of production right now with the hash rate reaching new highs is really putting some pressure on the miners. And those miners that really were over leveraged in the bull market and trying to leverage on the existing treasuries that they hold of Bitcoin to either accumulate more Bitcoin or accumulate more hardware. Those miners are coming under pressure right now. And I think that that's a risk to the downside because miners are that constant sell pressure. Also, from a perspective, I think from the macro, the markets are, equities just, bouncing around, more volatile than Bitcoin right now. And I think it's really, everybody's get this hopium thinking that the Fed's going to pivot and change their policy. And until they do, we're in this, this zone. And I think that until risk assets can actually see liquidity come back into the space, which would be a pause and quantitative tightening stopping. Essentially, quantitative tightening is draining liquidity from the system globally.